Right. Good afternoon, YouTube. It is Thursday, the 18th of August, and we are smack bang in the middle of August here. So not seeing as much excitement as we would often like to see in these markets. But there's a few things to keep an eye on, and we can maybe start with the data that was released today. So what do we have? We had the Philly Fed Manufacturing Index. This was a number that had been coming in pretty weak in recent reads. A couple of negative figures the last couple of months. We managed to get a positive figure this month, which is showing signs of relative optimism. We were expecting the number to be a negative number, minus 4.9, and we got a positive 6.2. So let's have a look at some markets that might well have been affected by that. We'll take a start with, well, there's a few markets to have a look at here. Maybe let's have a look at the S&Ps to kick off. When the data came off, well, this is the summer markets, right? We saw a little bit of a spike down on the number. It's just kind of reached those value highs for the day on the S&Ps. We are very much in the same range. What are we? 3 ticks off from that number. Not a lot to be said for that on the indices. Have a look at the dollar market. We had a little bit of a spike on the dollar yen. But the highs that we had in those first 5 minutes, we've given half of that back. And again, we are sitting kind of mid-range. The best performer arguably is the gold market. If we do have a look at what happened with the bond market, because this is often a big tell on the move in gold. So we did have an initial spike up in the yields. This is kind of very similar to the correlations what you see with the dollar yen. If you see this kind of spike initially and giving a bit back, that's very much what we've seen in that dollar yen chart as well. Spike up and give it a bit back. But gold has at least managed to get a bit more follow throughs with a bit of selling just after 2 o'clock as well. Just come down and tag the point of control for the day. And since had a little bit of buying, or not huge. I mean, there's no big volume coming through yet, so I wouldn't read too much into this. But at least gold, which we do ask you guys to kind of pay attention to which data or which market is moving the most on the date on each piece of data. And on this occasion, the gold market has probably been the easiest to capture. So that's something to pay close attention to with the leading indicators going forward. But hopefully, I mean, there's not a huge amount to kind of really rest on this. We've got we're off about $6 on gold in the last hour, 50 minutes or so. So not a huge amount to report, but at least some sort of action in the gold market versus the indices or the currencies. What else have we had? Well, news out just recently. We've had Fed Daily on the wire saying it's way too early to declare victory on inflation again. And that's something that she's been banging on that drum quite a bit this week. I know the Fed members in the minutes last night were saying that they're going to have to slow down the pace of the hikes. Obviously, they are hiking aggressively, and that is something they feel they will need to ease off. On that, having a look yesterday on the Fed Funds futures, if we have a look at the probability of a 50 basis point hike, it's coming in now at 64%. After the minutes last night, that was just about 60%. And as of this morning, it was actually up at 66. So it's eased slightly, that whether we'll get a 75 basis point or a 50 basis point hike next time. But the probabilities certainly are in the favor of getting a slightly smaller hike than we've had. You would have thought the indices would have reacted pretty well to this, as I was mentioning this morning on the Zoom. Take a look back to the S&Ps. When we had the Philly Fed news out, we're pretty much trading around that price again, as we were when we were talking about this morning. Really, on the DAX, we've had a bit of a spike up on the S&Ps from that 7 o'clock news that we last night, but we're kind of again about 3 up from there. So not a huge amount of change from the Fed minutes last night either. Other news, we had some news out of Russia today. The Russian Foreign Ministry have said that we have no interest in a direct confrontation with NATO and the United States, which is positive, and the use of nuclear weapons is only possible as a response and in emergency circumstances. So make of that what you will, given what we had yesterday with Chinese troops going into Russia to perform military drills with them in Vostok. There is a little bit of posturing going on here, and any kind of chat by Russians about how and why they might use their nuclear weapons always sends a little chill down the spine. But the markets, I mean, that was 30 minutes ago. We haven't really seen a huge amount of selling from there. tiny bit off on the S&P. So there's not a huge amount of risk coming on with that either. So what else have we got for you? A bit of filler for an August, mid-August Zoom YouTube for you today. But let's have a little look at the data through the rest of the day. We've got a little bit of existing home sales data coming out at 3 o'clock. We did have some unemployment claims as well, along with the Philly Fed, which was fewer claims than forecast. They're obviously expecting it to be slightly higher than this at 265, and so that's showing that the job market or job losses are lower than they used to be. So this is something that if the job market is still remaining robust, that probably will start to increase the probabilities that we will get slightly higher hikes or more hikes into 2023. And that's something that I know that the market's kind of pricing in that we're going to see easing next year, whereas the Fed speakers that we're hearing and the data that we're getting doesn't seem to suggest that they're close to that sort of pivot just yet. We shall see as the months unfold. But if this data keeps coming in strong, then as they mentioned at the last meeting 3 weeks ago, they're now data dependent, and if the data is strong, then the markets will start to the rates markets will have to move a little bit higher to try and create that demand destruction. And that was kind of reiterated. I mentioned this morning, but where are we? This was the comments that there was little evidence to date that inflation pressures were subsiding, or maybe since that with the CPI data we've had since that FOMC meeting 3 weeks ago suggests that maybe it is. But more interestingly, the participants emphasised that slowing aggregate demand would play an important role in reducing inflation pressures. And this is what we're talking about with the Philly Fed and with all of the leading indicators. If you have slightly less confidence and these numbers start to miss expectations and continue to kind of show a little bit of demand destruction, then they may feel like the battle is getting closer to being won. But for now, that doesn't seem to be the case. And don't forget, with inflation, the only way that inflation has ever been, or once inflation's got above 5%, which it clearly is now, the only time in history that's happened and it's ever been cured is that the Fed's funds rate, so the base rate in the US, has gone above the inflation rate. So obviously we're not looking at kind of 8-9% interest rates at the moment in the US. So the view is that they're going to try and maybe stay kind of on par and try and get to some sort of neutral rates, which they're kind of determining as where we are now, maybe a little bit higher, and try and get that rate back down towards the kind of more 6-5% level. And then at that point, maybe they can have a little push on the rates to get that Fed funds rate above CPI levels, and then perhaps that will be enough to get the job done in the longer term. So that's something with the inflation picture that we'll see over the next few months. So do be aware of that. If we do start to see inflation coming down and interest rates still creeping up and getting above the inflation rate, then perhaps that might be the job done. But who knows? Fed members always talk about this being different this time, right? History repeats itself, but it's always, this time it's different. This is kind of a common problem with central bankers, and often it isn't different. The financial system, we were in a quantitative easing cycle, or just at the end of that now. So yes, this is slightly different, but the kind of fundamentals of the economy are always kind of different. And so to see that rate go above CPI, it would probably be the first sign that we're maybe there, a little way off just yet. What else do we have for you? Let's have a look. We've got Fed member George speaking tonight after hours. I won't be here for this one at 6:20. Not normally the biggest mover of markets, but something to pay attention to if you are trading later on in the day. And then looking on to tomorrow, a little bit more on the retail sales out of the UK, but again, it's pretty quiet. The Canadian data, retail sales as well, is probably the only other one that I would normally pay close attention to. So the quietest week of the year is ending rather quietly as well. So I would say probably anything, maybe try and keep your powders dry. Things will pick up next week. We are going to get a bit more interest. Normally the markets kind of get a bit more excitement when we get through this Jackson Hole meeting with the major members of the financial system get together. And that's what's starting for this 2-day meeting, Thursday, Friday. And I think they're even on Saturday. Yeah, we only trade it these 2 days. And if you do start to get through this often takes us through to the end of the summer, and we can look forward to real markets being back and getting volumes back. Because if we have a look at the S&P, as I mentioned before, look at this on the daily, you can see how really since June, how dwindled this volume has been. It's out the way for you. Really, the last day of significant volume was the 14th of June, compared to what we've traded throughout the year here. The volume has been dropping off a cliff, and even this week, really, it's getting worse and worse. And that's why it's perhaps not as easy to trade the indices in the normal way. I mean, it has been quite easy to trade it on a buy the dip kind of summer grind. But yeah, when the volume hopefully picks up again, and we saw this last year, just to kind of illustrate, through kind of towards the end of August, and really by September, we really started to see the volume start to pick up again. Normally a good time of year through September. Often dictates, like the first year of Jan, kind of dictates the year. The first couple of weeks of September can often dictate what happens there. So I managed to get through 10 minutes before the open. I'm proud of myself. Let's have a look at what's going on with these markets. The initial open in the first 30 seconds, pretty muted on the S&Ps, slightly off on the NASDAQ, and yeah, up a smidge so far on Dow. Be interesting to see what happens with the yield today, given that data that we had, the Philly Fed, we did have that spike. If it can sustain above there, then that would be, arguably a bit of a headwind for the risk market. Certainly the likes of gold would struggle. They tend to struggle when the rates are increasing. Yeah, that's something I will be paying close attention to if I was continuing to trade that market today. But that one does seem to be one that's responding slightly better today than most. Yeah, I'll probably wrap it up. There's not too much more I want to go through with you. Just try and keep it tight at the moment. It's still another kind of 4 or 5 days of summer markets before hopefully we can get through the end of next week and things come back to normal. So just be careful out there. There's no need, if there's nothing jumping out at you to trade it, then I would suggest maybe don't bother. Making money is the easy bit in trading. Keeping it is difficult. And if you're taking trades for the sake of taking them, then it's often quite easy to give those gains that you've made back. So just be patient, wait for news events. Yeah, keep up on your tweet deck and keep on our discussion group. Hopefully you'll hear the news as it comes through, and maybe there'll be something in these markets that you're keeping to. Other than that, we'll be back with you on Tuesday on YouTube and back with you guys on Zooms in the morning. So yeah, we'll look forward to catching up with you properly then. Cheers.